The following program has been pre-recorded and is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hi, I'm Esther Gulius, the tax lady from EG Tax, and we're here to help you so that you don't overpay, or that you get the largest refund possible, or you're just the smartest cat at the outside picnic this year, because you know the truth, and the truth will set you free. So I'm Esther Gulius, the tax lady. This week we are not taking live phone calls. We will next week. We're chewing up your emails. I'm joined in studio with my two compadres, Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey.
His loyal sidekick and wife.
Yeah. Hey there, Esther. Happy Saturday.
Happy Saturday.
I just want to say, I hope
Yes.
it's okay. I know it's early, but this year we're starting to think about it early. Tax school, we have the registration on our website. And so if you're thinking about a nice side gig, just think about our tax school. It's offered in the classroom and online. It's a great option. I can't tell you how many people
I'm
love
going to tell
doing
you,
taxes.
I mean, if you're like a retired teacher,
Yeah.
looking for something to do during the winter months, our tax school is so good. We have 4 years of absolute free. The cost of our training we don't charge for, and so it can culminate in an enrolled agents, which would give you the certification of a CPA or tax attorney, and it's absolutely great. And how do people register?
You go to egtax.com and you click on tax school and you register that way, or you could call 632-7886 and we could mail or email you the registration form. And we're having different
and of
sessions.
course we've talked before about the bills from New York State for the unemployment. If you're somebody that's been getting bills from New York State for the $10,200 you subtracted on the federal but did not subtract on New York State, and they're billing you as if you did, give EG Tax a call. We'll help you with that, because obviously you wouldn't owe the money, and we certainly don't want you to pay something that you don't owe.
Correct. That's
And then
right.
the other thing is, as things progress with the change in the tax law, we will keep you abreast so that you know what to do. Just don't do something without knowing what the changes are, because we know changes are coming, but don't do things in advance and shoot yourself in the foot.
Yep, most definitely. Give us a buzz. We're
All
always
right,
there
so
to
we
help.
got all these emails.
Marty
And
says,
so, anything you want to say, Chris?
Oh, just, you heard our summer series with all our guests that we've had. They're great tools. Don't use them. That's why we have them on the air, for people to learn and to get the best advice out there. They're part of our family. You're part of our family, our listeners, and we want to make sure you get the best bang for your buck.
Right.
Yep.
Many times there are no bucks, because we just offer
Plan.
many of these things absolutely free, our free
Right.
services from EG Tax, because it's kind of like, it's like eating vegetable soup. They've got carrots, you got peas, you got the tomatoes, onion. There's all of that stuff, and when it's all put together, it makes the best thing to eat, right?
Yep.
Minestrone. I love minestrone soup. Well, that's kind of how it is at EG Tax.
Yeah.
You may not need us for this, but you might need us
Yeah.
for this. You
'Cause-
might not need us for that, but you might need us for this. You may not need us for that, but you might need us for that. And we are, I feel, a very comprehensive service that
We
we
also
offer.
have-
Because if we don't know, we will find out.
Yep, we also have payroll and bookkeeping, because I've talked to so many business owners and they get behind the 8 ball. And so Maria Rickard heads up that department, and Ray. And so if you need help with your books or getting you on the right track,
You're starting a small business,
they're the
what
tr-
to do,
they're the
what to
folks.
get.
Yep.
Do you have to collect sales tax? Don't you have to collect sales tax? When are the sales taxes due? All of that kind of stuff.
Yeah, Chris talked. Who were you talking to about sales tax? Several people, right?
Well, yeah, a lot of different people.
Oh,
But speaking of behind the 8 ball, I got an email here from Dorothy. It says, my son just told me that he hasn't filed since 2013. I'm scared because I know he owns his business and brings in about $250,000 a year. Can you help? Any suggestions?
Well, he should file, and I seem to be the specialty person for filing back taxes. And so just give me a buzz. And I think part of the reason, Dorothy, is I'm so good at it is I'm not condescending, and I'm there to not judge, but to help.
And here's the other thing. Just because he has $225,000 coming in a year doesn't mean that it cost him $250,000 to make the $225,000.
That's
right. You
right.
know what I'm saying? Because when you offset the income by the expenses to make it, many times there's not that much left because that's your profit, and you're not taxed on the sales. You're taxed on the profit.
That's right.
Well, you're taxed on the sales if you're doing sales tax, right?
Yeah.
But
And
but
then
it's the net profit that you pay income tax on. So maybe the reason nobody's caught him yet is that he doesn't have a net profit, or he hasn't been dealing with people that have sent him 1099s at the end of the year. But the thing is, he wants to, for many reasons, do the right thing.
Right.
Because
I mean,
of his Social Security, his credit rating, et cetera, et cetera.
Right. I mean, maybe he hasn't filed because he did get that letter from the IRS saying, hey, we haven't received your return, and we think you owe us $50,000 this year because there was that 1099 issued. And so now he thinks, oh my God, I owe $50,000. I don't have $50,000.
And of course, he wouldn't have gotten any of his stimulus.
Right. And
probably.
And when the IRS prepares a return, they prepare it worst case scenario.
Right.
They just say, oh, we got a 1099 for $250. Here's your bill. They don't go, oh, well, he must have expenses of $75,000, so it brings it down to $30,000. You know, that's where we come in to dig and to do all that.
And even if, and of course, we want Dorothy to understand that we will help her son, but he has to want to be helped.
Yeah. And then
sometimes people just don't even want to go there, and so they don't do anything about it. And until the Grim Reaper kind of comes at the front door, the IRS in the state of New York, and then it's really difficult.
Yeah, and then don't forget that once I'm all done with all those taxes, that's sort of why I'm the specialty person at it, is I do offers and compromises. And so those commercials you hear where you pay pennies on the dollar. And so if he doesn't own a house, if he has no means of collectability, we could present the case to the IRS and write up an offer and compromise. And so there's options. And I would like to help him to explore those options, you know?
Well, I mean, it's the same thing medically. When people say, you know, be proactive with your health, well, this is your financial health.
That's right.
You want to be proactive. I can think of somebody that was very dear to me who just had problems dealing with problems.
Right.
And so she had inherited some money from her mom, and she got this lovely house, and she got all kinds of stock. And so for the first time in her life, she was able to get a brand new car, right?
Yeah.
But the car then, about 2 months into the ownership, got a flat tire, and she put it in the driveway, and I kept saying to her, I won't say her name, did you get the tire fixed? Did you get the tire fixed? Did you get the tire fixed? Call AAA. You get the tire fixed. Do you know she let that car rust in the driveway? She never, ever got the tire fixed. And that brand new Honda Civic rusted in the driveway.
Yeah.
Oh, my gosh.
And so
And it's so sad, but that's how really many times people deal with their finances.
just have to make a move.
Right.
And
Okay, we're going to take a short break. I'm Esther Gullius, the tax lady from EG Tax. We'll see you on the other side. Hi, I'm Esther Gullius, the tax lady from EG Tax, and this is our hour to talk about taxes. And we are not taking phone calls this week. We will next week. We're chewing up your emails. I think you'll find it interesting about all the different nuances with taxes and finances, because one thing affects the other. It isn't just about what you're paying in taxes. It's your overall financial health.
that's right.
I mean, there are times when you say to somebody, okay, we can take a 179 election and write off this $200,000 truck that you bought, but then we don't have anything for next year. Do you want to not pay taxes this year and pay taxes next year? Because that's something collaboratively you want to talk to somebody because it's your overall financial health that we're thinking of.
Right. And when we talk to you in English. We don't talk to you in Taxanese, and talk over your head. We bring it down to a level where you understand so you can actually get the best picture and you can see plan A, plan B, or plan C and make the most educated decision you have.
That's well said.
Absolutely. Okay, we are chewing up emails. What do we got here?
I got Tammy from Tonawanda. Esther, my son is a resident of New York and lives in New York, but worked in New Jersey for about 2 months helping with COVID medical care problems. And then he was taxed in New Jersey. That doesn't seem fair that he had to pay New Jersey tax and all the New York tax. Was there anything we could have done?
Of course. He
Yeah.
could have done a 112-hour. He would have done. He earned the money in New Jersey, and so this is kind of the law of working outside of New York State. If wherever you earn the money, that's where it's taxed. But to be fair, your home state, which is New York, would give you a credit for taxes you paid to New Jersey.
Correct.
So you do the New Jersey return, and then on the New York return, you get a credit for that on a Form 112R, and then you carry that credit forward to the taxes, and it reduces your tax liability on New York State by what you paid to New Jersey.
This makes me think of an amended return that I did this year. There is a Florida resident who owns a house in New York, so he also had to do a New York return. And the person who did his return, prepared his return, when they were doing the allocation, he had a large capital gain, and they allocated the capital gain to New York State instead of Florida. And so I saved him about $2,500 on his
I
federal
bet you he
return.
gets audited.
Yeah, but I
bet you New York is not going to say,
Well-
wait, we want to make sure that this was
You're right.
sold
Well,
while he's living in Florida.
But I could, because I just had a client who came in who did get a letter from New York State because his employer did withhold New York. He lives in Virginia, and so he never worked in New York last year, so they want proof that he wasn't in New York. So he needs a statement from his
here's
employer.
The thing. I mean, New York is really, really good at follow through before they send you the money. So don't just cave in and say, "Oh no, they must be right." No, they're doing their due diligence before they send you the money. So if you need help, if you're getting those love letters, give EG Tax a call because we certainly will help you.
Yeah,
Right,
change
right.
your withholdings.
Yep.
Tying into that.
What
And
else we got?
I have Brian. I listen to your show at every chance I can on Saturdays, and I just joined your family this year at your office on Main Street in Williamsville. The preparer did an amazing job and even was able to fix my mistakes from previous years, which gave me an extra $2,500. So thank you. But now I have a question. I want to buy a new home, but I have to take money out of my 401k for the down payment. My work says that this is a hardship and I won't get penalized. Is that true?
No.
Well-
The money has to come from an IRA, not a
Right, it
qualified
has to
plan.
come from an IRA. In order for there not to be a penalty for taking money out of your pension plan to buy a first home, it has to be out of an IRA. Tiffany's right. But number two, what I'd suggest is anytime, if you're under the age of 59 and a half especially, if you have a pension plan, what you want to do is a loan against your 401k.
Correct.
Yep,
Because then you pay yourself back on that loan over a 5-year period, and the loan is tax-free, completely tax-free. So if he had to take $20,000 out of his 401k, he's going to pay himself back over a 5-year period, and it's completely tax-free because it's borrowed money. Borrowed money's always tax-free. If he took $20,000 out of his 401k plan, he's going to pay a penalty of $2,000, right?
Correct.
Yep.
Plus taxes of, let's say, minimum state and federal $1,500. So we got 15 and 2, so we got $3,500. So you save $3,500 by paying yourself over a 5-year period rather than taking the money out of your 401k plan.
right, and that could buy you a new couch for your new house.
Right.
And also, there's not a lot of inventory on the market right now, and so people are paying lots of money for houses. Granted, the interest rates are really good, but maybe
They're going up.
Yeah.
I'm going to tell you, if
Yeah.
you haven't refinanced, you are about to miss the boat.
Yeah, Jesse at Cross State Funding we had him on for our summer series, as Chris mentioned, and he does a phenomenal job at Cross State Funding. And so, if you have those higher interest rates before they go up, like Esther said, make sure you run the numbers and seeing if refinancing might be a good idea for you. But yeah, this guy. There's also a lot of banks that have programs for first-time home buyers, and I would invite him to give us a buzz, and we can tell you about some of those programs, or to call the bank that you bank at.
Here's the big thing. The last place you want to take money out of is your pension plan, especially if you're 59 and a half or under. Okay. The second worst place you want to take it from is your IRA. However, there is an exception for a first-time home buyer.
Right.
Out of your IRA.
And that's
for
only
the penalty only.
Right, and that's only for the first $10,000. So if he took out 20, it would only waive a $1,000 penalty out of the $2,000 penalty.
But the best thing to do is to borrow the money, or liquidate an asset. Maybe you have some stock that isn't doing very well. Sell it and then you don't borrow the money from your 401k plan at all.
Right. Look at all the avenues first.
Right. In other words, the last place you want to take it from is your pension plan.
Right.
Absolutely.
Okay.
Okay, we got Marty from Fredonia. EG Tax Gang, I'm self-employed and my husband is self-employed. Together we gross about $180,000. This year we owed $26,000 to the IRS and about $6,500 to New York State. I'm just sick about this. What can I do to prevent this in the future? Well, planning is really key, and doing estimated payments are a really good idea. And then bookkeeping is really important. So you want to make sure that you're writing off all your expenses and looking at the whole picture. And don't also.
But I mean, the truth is, if she's making the money and she's done a good job bookkeeping and she's written off everything that she can and she's put money in her pension plan,
Right.
If she's done all that and she still owes $26,000, thank God that you are making money.
This is well said.
I mean, you don't pay taxes if you're not making money. If you're, people say to me, I don't want to pay taxes, so I'm not going to work the overtime. Duh. I mean, let's say you can make $50,000 working overtime, and yes, it's going to cost you $15,000 in taxes, but you came out $35,000 ahead after taxes. It would be stupid to say, no, I don't want to make 50 because I got to pay 15.
Yeah, never a good plan.
So same thing with her. If you've done a good job with your bookkeeping and you paid your estimated and you wrote off everything properly and you've done everything you can and you owed money, be thankful.
And then don't forget, I see a lot of self-employed person missing the health insurance adjustment to income, or if they put money into a SEP,
or they're just doing an IRA instead of an SEP.
Right.
And so, Chris, explain the difference between an SEP and an IRA.
Sure. An IRA, depending on your age, you can either put in $6,000 if you're under 50 a year per person, or if you're over 50 or over, you can put in $7,000 max. But an SEP does 20% of your net profit. Basically, it's 20%. So here we'll say if she makes $100,000. 20 as her net, she could put in $20,000 into her return
versus 6 or 7.
Right, and it's her money. It's not going to the government. It's her money.
It's just moving around.
And
money.
so, if she were in the 20% bracket, and she put away $20,000, she would save
$4,000.
$4,000 on the federal and money on the state. So let's say $5,000. So you put away 20. There is your 20. It's 20. It's your money. You can go get it. and you save $5,000 in taxes.
Yeah, and I also want to say to this person, they should try to pay off their IRS debt. Don't let it snowball into the next year. If they can get a home,
good point.
Yep,
Tiff.
if they could get a home equity line of credit. I know Pentagon Federal Credit Union. I've used them myself for loans, personal loans. They have good interest rates, at least paying off New York State. But having this snowball and become a year after year, year after year event is not a good plan.
And you were talking about doing offers and compromise. If you have the ability to pay, and you
Right.
don't pay, and you just don't like to pay them,
No.
and so you just keep racking up the balance dues, you won't get an offer and
Yeah,
compromise.
there's so many people that call me and they make $85,000 a year. The IRS, they pull all your finances and they're just going to laugh you out of stock and barrel because you pay for an application fee for the offer and compromise. So no, it doesn't work like that. You got to pay if you have means. You know, it's doubt to collectability, and that happens for many people. There, bad things happen.
However,
Unfortunate things
if
happen.
you've had a rough time, if something bad happened, if your health has taken a turn for the worse, if you're not making money, that's where an offer and compromise really comes in. Okay, I know we got to take a short break for news. I'm Esther Golias, the tax lady from EG Tax. We'll see you on the other side. Hi, I'm Esther Golias, the tax lady. Thanks for listening. I'm joined in studio with Tiffany Fabian, Christopher Fabian. We're not taking calls this week. We're chewing up emails. Of course, if you need the best tax help, or you're getting love letters, or you're confused, or you're wondering where the heck your 19 and 20 refunds are, and you're frustrated because you call the IRS and they keep hanging up on you, we know the feeling. We certainly want to help. You can call us at our corporate headquarters. Our website is egtax.com. Our phone number at the office, 632-7886, and we want to help you. And
Yep, and I want to help.
And one other thing, you don't have to feel funny about coming in. If we didn't do your return, we don't care. We just want to help.
That's well said. Well said.
All
People
right,
people will call me and they're like, I heard on the radio. It doesn't matter if I did my return with you. Bingo, you're right. Lincoln from Lincoln says we want to help Lincoln. My company struggled to stay open during the pandemic. I have as all restaurants kept open with carry-out foods, made enough for payroll most of the time. I did get the PPP money, which really helped. Is there something I could be missing under this scenario? Lincoln.
Well, he might be somebody because he kept payroll, and I think very few people use this, the employee retention credit.
Right.
I mean, I talk to business owners all the time, and I'll say to them, well, did you do the employee retention credit? And they look at me like a deer in the headlights. They don't know what I'm talking about. So if Lincoln in 2020,
It was there for 2020 and
right,
2021.
had lost more than 50% in gross sales per any quarter, he could have gotten an employee retention credit of up to $5,000 per employee. It's a lot of money.
Yep.
So on his 941, so he would get a big refund on his payroll taxes. So if you had 10 people, did it say how many people he's got?
No.
So if you had 10 people, he might have saved $50,000. Look into the employee retention credit.
Yeah. I had a client call and they said, I heard you on the radio talking about that. And I called my payroll company and they said, I don't know what you're talking about.
You told me about that. Yeah.
And
that's very scary.
That
means they didn't do it for anybody.
Yep. I said, you need to call and talk to a supervisor. You need to because I wish I could help you, but it's not an income tax. It's a payroll tax credit. So you need to get a supervisor or a supervisor on the phone. And they called back a couple days later and said, thank you. It just saved me like $20,000.
Wow, I think I'd get a new payroll company.
Yeah.
That is so cool.
Of which we do payroll. But anyway, here's the thing, though. In 2021, it was a 25% reduction.
Right.
So if in your first quarter you were still down 25% of the previous year's, that first quarter we were still cooking in 2020.
Right.
So pretty easily, you probably could have been down 25% first quarter of 2021 versus 2020. So I'm sure, because it was so obtuse, because people don't understand payroll taxes, I think there's tons of people that have missed that credit. It's ginormous.
Yeah, when we have that business seminar, that's going to be huge.
That's
and
right.
you
And
can amend.
You can amend. Right.
And hopefully, Lincoln, you applied for the PPP forgiveness.
Yes,
And wrote off
which is
those
a great
expenses.
point. If you don't apply for the forgiveness, then it turns into a loan. But it should be, and there's time limits
Yeah.
for asking for that forgiveness.
And I know with PPP2, it just started the application middle of July.
Yep.
So that's when they're opening the portal. Supposedly, it keeps getting pushed back.
Yep.
But now it's middle of July for the PPP2 forgiveness application.
Yep. Okay. What else we got?
Chris, you got one?
Esther, I haven't touched my stocks that I own since I bought them in 2008. I met with my broker, and he said it's time I should diversify my portfolio since I'm 58 years old. When I bought the stocks, I invested $100,000. Today, they're worth $275,000. Should I do this, or should I keep them?
Good
Well, he's
question.
got a $175,000 gain, it looks like, right?
Right, he has a $175,000 gain.
Right.
So that would be a huge, especially if they raise the tax rates.
Right. I mean, so that's where he really needs to have his pulse on what's going to happen to the tax rates. Now they say if he's under 400,000, they're going to keep everything the same. But until these people start tinkering around with the tax law, you never know what they're going to do. So, would I consider that? Probably.
And I would ask more questions.
Probably.
Who was this?
Because let's just say that
Tim.
this year they say 400,000, and next year they say, oh well, it's going to be if you have 250,000. You just don't, and you don't know. Here's the worst thing: it isn't just the taxes. What's going to happen to the stock market?
Right.
Your
they raise the interest
$275,000
rates.
gain might go down to 200,000.
Increase capital gains.
Because I'm going to tell you, the stock market's not going to like this. So you really do have to be a wait and see, but don't wait too long, and that's part of what we're here for. So.
Right.
Yeah.
And see what what they want to invest in. Talk to a different broker and see what they say.
And see if you have any, you might have mentioned this already, losers that you could help to sop up some of that gain,
Yep.
right?
Yep.
Because that would help. I know one of my clients this year had a large gain in Apple stock, and I really wish that he would have called me before he did it. Or Chris, Larry from Georgia always does a conference with you and his broker, so the three of you together can come up with a plan, a strategy, right?
Right.
But what obviously with them looking at tax increases, that's a very serious thing, and it is going to happen. I'm going to tell you. So and remember, we're just at the first of 4 years, possibly 8 years of leadership here under the Democrats, and if they keep looking at money that they need. You got not only the extra taxes, but maybe the negative effect on the stock market. So it's a double whammy. So you certainly, you certainly want to think about it, because if you take your money out, but then obviously if you take your money out of the market, then it's got to go into something else. I think that's what Tiff was alluding to. So at least if you did your profit taking, then you could start with a brand new balance sheet.
Right.
Yeah.
Okay?
Yep. We've got a few questions like Larry has, so I'm just going to go to Larry's. EG Tax, looking to the future and retirement in 10 years. Should I start moving money from my 401k to a Roth IRA? I was thinking about doing $50,000 a year. I'm single, and I make about $75,000 a year. And there's another question like that, so I figure if we tackle his, we can tackle
What's the other one?
The other one says, the other one says, Esther, I'm 65 years old. I have a small pension from New York State. I was thinking of converting some of my traditional IRAs to Roth. I want to give you a full picture. I'm married. Yearly pension is $40,000. My wife's Social Security is $18,000, and mine is $27,000 a year. We don't have to take RMDs yet, so I was thinking it would be a good time to do these conversions.
Okay, so there's no doubt about it that you will save money when your RMDs are required at age 72. Okay, probably because because tax rates are going to go up. I think. Now they may not go up much on you, but you have to understand here's the trade-off. When you put money from a traditional IRA or a traditional pension into a Roth, you pay the taxes now.
Correct.
It's not like some tooth fairy takes away the taxability and it's never taxed. You either pay it now or you pay it later. Now, there are some people that say, well, I don't know what it's going to be like in 12 years. In 12 years, it could be another regime that says we're cutting taxes because you don't know. But what we do know is when you put your money from a traditional into a Roth, you pay the taxes now. You're living and breathing now. The taxes you pay are taxes on your income now. So let's say it's $100,000 and you're in the 40% bracket, state and federal. You're going to pay $40,000 in taxes now.
That's a lot.
So then you have $60,000 left.
And where are you going to get the $40,000 from to pay the taxes?
$100,000. So you're going to pay taxes now. Now it'll start building again, and at some point you never have to pay taxes later, but you're going to pay taxes now. So I've always been of if you really want to do Roths, start fresh on this. But I will tell you, you have to think long and hard if you're going to convert from a traditional into a Roth, because you lose the money and the buying power and the future investments on that money now.
And also look at your 401ks. I can't tell you, when I tell somebody of my clients when I'm doing their tax return, so many of their 401ks have the code AA, and they're investing in Roths when they don't even know it.
Right.
And so they said, oh, I didn't know. That's what they told me I should do.
Right.
And so when I'm looking at their W-2 at the end of the year.
Brand new money, if I thought that they were just going to keep beating people over the heads with taxes on brand new money, that's not a bad idea, putting fresh money
or
in
diversifying, splitting some of it up.
But to roll it all over now, you really have to think long and hard. Now, that doesn't mean that there's not a bunch of people out there whose standard deduction is so high that they should roll over from their traditional to a Roth a little at a time now.
Right. I mean, if you have
that requires planning.
Right. If you have your kids in college that say you have a freshman and a sophomore in college, that's a $5,000 tax credit. Well, then maybe you can use that credit to offset the conversion, but like you said, that's all planning. But here, if Larry's single, he may be jumping from the 12% bracket to the 22% bracket. So that's now giving him a 22% on that $50,000 plus New York State. And if he doesn't work for the government and he works for a private sector, he probably doesn't have a regular pension plan. So how much is his minimum distribution going to be when he's 72? So is he paying?
And not to mention, he's 58 right now, right?
No, that was the other guy.
Okay, but that's 12 years.
Yeah.
12 years standard deductions probably means that in 12 years, the standard deduction for him might be $36,000 before it's taxed.
Right.
That's a good
And
point.
he paid taxes of 30% way back 12 years ago, and now the first 30-some thousand is tax-free. And he didn't, anyway, because we don't have a crystal ball. We don't know what's going to happen.
Right.
Yep, and
All
that's
I
why
know is
planning.
what I know now, and I know that I'm alive and breathing, and giving them the money now.
That's sort of like your withholdings with New York State, have them have lots of withholdings and waiting for your refund.
For the money, and you don't know what's going to happen.
Yeah.
So that taxes are going up now, but we don't know in 10 years what's going to happen.
Correct.
So, or 8 years or 5 years. And we don't know you're going to be alive in 5 years.
Correct.
Right?
Yep.
All right, I'm Esther Gillies, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side with your questions. Hi, I'm Esther Gullius, the tax lady from EG Tax. Remember, our corporate office is open 9 to 5 Monday through Friday. We have a number of franchises that are open as well. Our website is egtax.com. And if you have tax questions and you'd like to be maybe part of our show in the future and you want to email us tax questions, go to egtax.com, ask the tax lady. But anytime you just need a question answered, you can go to the website. There's absolutely no charge. And don't forget, EG Tax not only does taxes, we do bookkeeping, accounting, payroll, we do
Offers and
health
compromises.
insurance, and the health insurance is a free service of EG Tax. The health insurance isn't. The ability to place it for you, and the best place is absolutely free with
Knowledge.
Tim Eliason and EG Health Connect.
Yes.
All right, I have Tiffany, Fabian, Christopher, Fabian here. We are on the last part of the show. What do we got here?
I got a good question. It's from Jessica. EG Tax, I owe the IRS in New York a ton. I took $75,000 out of my 401k last year because they laid me off due to COVID. How can I make payments to them? I'm afraid to mail it in. Christopher?
Oh,
Esther?
so she hasn't done her return. She's got it done, but hasn't
Or
sent
maybe,
it in.
maybe she has the voucher and
Okay,
didn't
well,
mail it in.
first of all, what is screaming out about this question?
Well, she
Under the
took
CARES Act.
Yeah, she took $75,000 out of her 401k, so she could actually spread that $75,000 out over 3 years, and then there would be no penalty on it
penalty.
as well.
Right, which is like marvelous. So the penalty that she would have paid of 10%, $7,500, that's eliminated, right?
Correct.
So it sounds like she didn't do that on her own return.
No.
And secondly, instead of $75,000 in 1 year, it's spread out over a 3-year period. So it's a third, a third, and a third.
Yeah, so she should amend that return so that she could take advantage of that.
Right, and get it sent in. Now, if they did withholding, she doesn't say that they did withholding, but if they did withholding, she probably has a big refund, not a big balance due.
Yeah. And then I just got to say, don't forget if you were laid off and you got unemployment, don't forget New York State unemployment doesn't mail you the 1099-G. So hopefully you put your unemployment on the return too. But yeah, next year, gosh, I was just thinking about this, Esther. Next year is going to be daunting because those people that spread out over 3
they're gonna owe
years,
money, a lot of money.
They're going to owe money.
Yep.
We have to keep track of it. We have to keep
However-
track of the child tax credit, the advances.
Right. However, you think about the $3,600 and the $3,000 for child tax credit, that might help some of it,
Right.
because many of those people took it out because they have little ones at home. They were trying to make ends meet.
Yes. Yeah.
Right,
So,
which-
God, I would implore this person to amend it. What were you
Yeah,
going to say?
which could lead to our next question from Sarah. Can you please help me understand this new stimulus?
Stimulus.
Is it true that I'm going to receive an extra $300 a month for my 2 children that are 2 and 4, and then an extra $2,500 a month for my, or $250 a month for my 8 and 10-year-olds? So if this is true, we would receive $1,100 extra a month. This sounds too good to be true.
It's
It
true.
is. Yeah, because that's
It's
not
just
a
true.
stimulus. Well, it's not a stimulus. It's the
an-
advance.
It's an advance of your refund.
Right.
So if
And so next year's refund is going to be $1,100 times 6, $6,600 less than what it would have been because they're giving you the money up front.
Right. So if you were Jessica in the previous one and thinking, well, I'll use this new credit to offset this, you're getting it now. So for 2021, you're still going to have a big balance due, unfortunately.
Right.
Yeah,
So you really have to think about your lifestyle, what you want to happen. If you're, they're making the earned income credit bigger too. So, and the daycare credit is bigger. So, what you really need to do is, I would suggest you give us a call so we can project what your refund's going to be next year, so you can make best use of that money.
Because could
$1,100 a month is nothing to sneeze
yeah,
at.
could you modify it and just get $100 a month if you wanted to? Do we know that?
I don't think
don't
so.
know.
I think it's all or none.
Okay,
Yep.
because Esther's
Think about
right.
that. Talk about an accounting nightmare.
Yeah.
And I hope to gosh they send out some kind of a form.
Or put a
Not
tool.
like what they did this year with the stimulus. I hope they send out a form that says, we gave you
Yeah,
$8,000 advance.
Yeah.
Oh,
Or
yeah.
put a tool out there on their website.
Yes, right.
Because I can't tell you the problem it was with the stimulus. Did you get your stimulus? I don't know. Well, and so I had people in my office looking up their bank accounts, trying to figure it out.
I made them look up their bank account.
Yeah, because it was really stressful. And now, if we say that you didn't get it, when you did get it, it's holding up your refund. Chris said, like, you're right, up to 4 months. And so I really hope that they do something to manage it better next year.
But, you know, they're so far behind the 8 ball.
Yeah.
I don't look. I mean,
And
you
they're all
can't
working
even get
from
them
home.
to answer the phone.
They're all working from home. And so there's trailers of mail and letters and amended returns. And that's because...
And just FYI, don't send a tax return via paper. They won't open it up for a long time.
Yep. I know.
Okay, what else we got?
We got Betty writes in, Esther, do I have to take my minimum distribution this year? If yes, is the charitable giving still available?
How old is she?
But she said minimum distribution.
You do. She
So-
does.
All right, so if she's
She
72,
has to be over 72.
Yes, she does, and yes, it's the charitable distribution rollover is still in effect. So explain what that is.
That's when you take the money. You can take up to $100,000 out of your IRA, and that includes your minimum distribution.
And it's got to be out of an IRA.
Yep, and it goes directly to the charities, not to you. It goes to the charities. So if it's St. Jude's Hospital, the money goes from M&T Securities to St. Jude's. They get the check, not you. And so that check, if it was $50,000, doesn't count as income on your tax return, which helps keep your income down. And you don't get to use it as part of your itemized
But
deductions.
of course, you're getting really a full deduction for
And it's
that.
going
Right.
to lower the taxability
I mean,
of your
it's
Social
a
Security.
phenomenal thing because let's say you take a standard deduction on the right-hand side. Had you taken it as a charitable deduction, your standard deduction would have reduced really the benefit of your medical. I mean, not your medical, of your charitable that you're taking. So this is 100% bang for your buck. It's a great way to do it.
Right. And, I know a lot of people out there are confused because last year you didn't have to take out a minimum distribution. And so we're getting calls, do I have to take 2 distributions this year? Is it just one? It's just one. All you have to do is take your normal distribution this year. They just put a pause on it last year. They're not going to penalize you because what they did. That was sort of being nice.
Right.
Okay,
what do
I've
we
got Alex. Esther, every year with my refund, I let the IRS keep it for next year as a just in case, like $1,500. I just don't want to owe them, and I get penalized for owing. My friends tell me that I'm stupid for doing this, and are they right? Alex asks, should
Well,
he
I mean-
let them keep their refund? I
I don't think you're stupid, Alex. Money is a strange thing because you're dealing with people's how they deal, their personal motivations, and so many times, if you're going to be upset, it's not worth it. What kind of money are you losing at the bank?
Yeah.
0.2. So if that's what makes you happy, knock yourself out. I mean, it's not the best use of your money. You could take that $1,500, put it on a charge card, help pay down your mortgage, but it's $1,500.
Yeah,
it's not
so
the
funny
beginning or end.
when I'm talking to people and they say I want to make out take out the 20,000, and so I tell them what to do in withholdings. But I say to them, so do you like having a big refund? Are you going to get stressed if you owe $900? Because I think you raise a really good point. Is everybody's personality is different, and you need to know what
There
their
are some
vantage
people
point is.
that would say, no, okay, so Esther made me take that $1,500 out. Now I'm going to worry, and I'm going to pay my doctor $2,000 in little pills because I'm worried.
Right.
That's not worth it.
Right.
If it was $150,000, that would be different. But something small like that, if that's what's going to make you happy, it's not what I would do, but
I'm going to sneak in Bob. Oh, before I do Bob, yeah.
I wanted to say also, though, if he's worried about paying a penalty, if his refund's over that $1,500 a year, the penalty doesn't start until he owes $1,000.
right.
So, I mean, again, it all depends on your personality and everything, but it's just not, oh, I owe $500, I'm going to get hit with the penalty from the IRS. That's not how it goes.
Good
You have to
point.
owe over $1,000.
And some people, you just say you owe $10, and they're, oh, not $10.
Right.
I owe $10. It's the word "owe." It just drives them crazy. So
Yeah.
whatever.
Bob says, Esther, my job just informed me that we will be working from home for 2 weeks a month and in the office two weeks a month. So now this is a permanent thing, and I'm converting one of my extra bedrooms to an office. Are any of my expenses a tax write-off? Good question.
It is a shame, but it is not.
Right, I agree.
On the
with you.
federal.
It is a shame.
But if you're self-employed, it is.
Right. If you were self-employed, it would be. But as an employee, no dice, except on the state of New York.
Right, and believe it or not, I consulted a new client. They came in. He started a new business. She worked from home as an employee. She had the private bedroom as an office. I said, no, you're converting that to his bedroom, to his office, and
Right.
you use the dining room table because that's going to save you a lot of extra money.
Right.
Very good
And
point.
went
If
through
you're
the
self-employed, it's going to save you the 15.3% off ICA plus income tax, federal and state. That's if you're self-employed. As an employee, nothing.
Yeah.
Nothing.
No
I mean, if you're
dice.
driving around for your employer as an outside salesperson and you're on a W-2, nothing.
I mean,
Only on New York State.
Here's a good example. I did, not me, somebody did an office and home on the state for somebody, and New York State is auditing them on it, and it's going to save them $14. I said, let's just convert it to the standard deduction. I mean, $14 is
Right.
all they got, So, but maybe for certain people, it makes more of a difference there if they have mileage and
Right.
office expenses.
things,
Because
right.
I know a lot of people who did the office and home, they bought desks and they bought chairs and they bought
computers and headsets and Zoom.
Yeah.
Yep.
So there's
Okay.
that.
All right. So you got anything quick, or we just
We're
wanna say
done.
goodbye? All right. I'm Esther Golias, the tax lady from EG Tax. If you're getting letters, you're upset, you haven't filed tax returns, you're wondering about the changes in the tax law, you haven't gotten your 19 refund, 20 refund, stimulus, we're there to help you 9 to 5, Monday through Friday. We'll make special appointments for you. You go to our website at egtax.com, ask the tax lady. Our phone number is 632-7886, and our office is on Colvin near Brighton in Tonawanda. That's our corporate headquarters. Thank you for listening. I'm Esther Golias, the tax lady, with Tiffany Fabian and Christopher Fabian. Have a great weekend. God bless. Bye-bye.